Good morning. Let's make a quick study on AMKR, starting by technical analysis. This is the long-term chart. Since 98, the IPO was here at about 10 bucks. Then the stock went as high as 65 or so in 2000, and currently at 12.46, near the lows. Move on. But the short-term chart looks really awesome, with the stock breaking out above the $12 very important resistance level today as I speak. It had this nice consolidation period of about 3 months or so, and now breaking out. It looks like an ascending triangle formation, and 50 days is above the 200 days, so technically I really love this chart. Technical overview. AMKR is technically perfect, breaking out of an ascending triangle pattern as I write. Just beautiful. Fundamental analysis. Sorry, I have a cold. Okay, there was some dilution until 2003, but almost none since then, which is a positive development. The market cap is now $2.2 billion. As for the balance sheet, well, this company has a lot of long-term debt, 1.82 billion, but it has been paying back debt slowly but surely. It was more than 2 billion in 04, and the current ratio is kind of low at 1.15. I like to see it above 2, but it also improved from 2005 levels. So I can see fundamentals are improving here on the balance sheet. As for revenues and gross margin, yes, we had this record revenue number in 2006 at 2.7 billion, and analysts are expecting 2.82 for 07. I believe they're a bit pessimistic here, and 3.19 for 08. Average annual revenue growth since 2001 was 15% a year, and the industry grew 20% from 05. Gross margin for AMKR is 35%, was 35% in 2006, and the industry average is 42%. But our company is trading at a much below average price to sales ratio of 0.81 against the industry average of 2.41. So it looks like it is trading at a deep discount to the industry. As for earnings per share, well, the company had these big losses here in 01 and 02, and in 05 too, but in 06 we had these 90 cents earnings per share on a 6.27 net profit margin, and we start expecting 1.01 earnings per share for 07 and 1.25 for 08. So the company looks like it is getting back on track, and I've heard some conference calls from the CEO, and I believe he has learned from past mistakes when they cut prices too much here. But price to earnings ratio is 12.3 and 25.5 for the industry average. So again, this discount picture here. Fundamental overview. No significant dilution since 2003. Balance sheet is still weak with 1.82 billion in long-term debt and a current ratio of 1.15, but it is improving. Revenue is growing at an average 15% rate since 2001. It was 2001. Price to sales ratio is 0.81 and the industry average is 2.41. Net profit margin was 6.27% in 2006. Price to earnings ratio is 12.3 for AMKR and 28.5 for the semiconductor integrated circuits industry. As for long-term estimates, this is the most important part of the analysis. I should make a model for this. I'm thinking about it. But I estimate revenues will grow at a 15% average annual pace for the next 10 years. A net profit margin will be 7.5%. This could be better if they start paying down the debt. Interest costs will will diminish and the net profit margin will rise. That's what they're doing. Given this, the company will have revenues of 11 billion in 2017 and net income of 828 million. Apply an average 16 times earnings multiple, and this could also be more since the industry average is 28. But let's keep it this way, and get a 13.25 billion market cap. Given these estimates, I expect a long-term return on investment of 20% for AMKR, which is attractive, 20% a year, of course. I look for at least 16% average annual return, so 20% looks appealing to me, and my rating on a 1 to 10 scale is 8 for this company. Thank you, bye.